Alright, good afternoon everyone. Today is January 12th, 2012. It's 1/12/12. We're going to go over the trades we took in the live trading room this morning. We'll go over some things that we're going to talk about in the partners meeting tonight. Just a reminder to everyone who is a partner, tonight at 9 p.m. Eastern Time, we will be having our partners meeting, our weekly partners meeting, the workshop. If you don't have a link to it by, say, 8:30, quarter of 9, email me at tech@cfrn.net. That's tech@cfrn.net, and I'll send you out the link to get into it, okay? If you're in here on a trial and you're on the fence, the partners meetings are awesome. They're just awesome. There's so much to be learned and so much information that's distributed in there amongst the partners. Tonight we'll be going over, well, a bunch of things. More 6E stuff, and Mike R. said he would go over his trade log for the week, and we'll go over his trades and anything else that anybody has to offer. Alright, that said, let's get into what we did today and what we didn't do. Alright, we took one trade. I'll start out with the results. We took one trade this morning on the ES for our 2 points, alright, plus 56 ticks. We got the 2 points right there. I just had the rules up here a second ago. Now I'll scroll them, I'll slide them back so we can go over the rules with the actual setup, okay? And this is being recorded, so anybody that needs to see the rules in writing, here they are, and it'll be recorded, so it'll be in the recaps. Alright, so the first thing we had to do is get a higher or lower swing. Alright, I need to change it to say higher or lower swing depending on the direction. This was our lower swing. This bar right here was our lower swing. Number 2 is BBC's outside the box. The BBC is this green line right here, and it was outside the box. Number 3, get a fresh bubble. The bubble is down here on the chop bands. Okay, so we had a fresh bubble. And number 4 is the pullback to the BBC must be clean, meaning no high or low pivots for shorts. We didn't have any of those, and I'll show you what those are in a minute here. So number 5 is just ended with an MIT order, rounding the BBC up or down to the nearest tick. We rounded it down to the nearest tick in this case, and we just waited a little while, and we got our 2 points. And that was it. When I say a clean pullback to the BBC, it means no space like this right here. This has got a double bottom in it, so I can draw a trend line across these bottoms. It also had a little space right in here. I know it's hard to see right here on my chart, but right there, that little space right there, before the double bottom was put in, that was put. Oops. Before the double bottom was put in, that was put in, and that also disqualified the pullback at this point. You see right in there. If I draw a trend line across these right here, you can see there's space right there. You can't be able to draw a trend line across pivots like that and have there be space. Alright, so we didn't take this trade because it was disqualified. And we waited. Now, the weekly trading zone was right down below us here. I was saying in the room that it looks like it's probably going to get down to the zone. If you look at some of the other time frames, you know, our initial trade was right here. This yellow arrow right here was our initial one. On the 2100 tick, you know, a bunch of the guys in the room were asking, is this a 2100 tick trade? I didn't take it because of the way the cycle was looking right there. But I did say if it's going to bounce off the BBC here, it's probably going to go down to the weekly trading zone. And it did go down to the weekly trading zone. Now, one of our partners has a trade set up off the weekly trading zone. I'll show you what it is. Now, it's a counter trend trade, and most of the trades that we take in the live trading room are trend trades. This is a counter trend trade. The first time that price is approaching the weekly trading zone, he would put an order here to buy, and also an order at the next level down. It would be 1 point. He would put an order here to buy with 3 points risk, and an order here to buy with 2 points risk. Once he gets filled on one of them, and he gets his 2 point target on it, then he he takes the order off on the other one. All right, he won't be looking to take profit on the second one. Okay, that was pretty much all we had this morning in the live trading room on the ES. Now I'll go over some of the YM trades. All right, and I'll also look over here on the 2100 tick. This was where we took the trade this morning. It wasn't the first pullback. The first pullback after the 50 dropped down below. I mean the cycle dropped down below the 50, right there. Happened to be right over here. Okay, that was the first one. Over here was the second one. All right. Michael R. actually took this one. He shorted from here, and he got 4 points right down here. Okay, when it pulled back up above the MA1, he took some profit right there instead of staying in it all the way down. The trade that we took was based on the 4-tick range, but it was from right here. If you had done the Michael R. trade right there, then you would have gotten 5.25 points out of that. And that was it. There was some question toward the end of the live trading room if we were going to take this long trade right here, and the only reason I didn't want to take that long trade was because we had this resistance right here on the 10K. All right, that was why I didn't take that on the 2100. Well, that wasn't the only reason. There was that, and the 4-tick range was still showing bearish potential. All right, the 4-tick range was like right here. Now the 4-tick range is showing a possible long trade. Okay, we need the BBC to get outside the box, but we need a fresh bubble too. So we need the bubble to get outside the bands, and then we would be able to take or consider taking a long trade there. Let me go over here on the YM a little bit. All right, we had a couple of trades this morning on the YM. I didn't take them. That's why they're marked in orange instead of in the normal yellow. All right, but we had a bearish cross here, and it pulled back up right here. Okay, from there, just short it, looking for it to get down here to the MA1. If it gets on the other side of the MA1, in this case it just went right down to the zone, bounced off the zone, came back up, then it was bearish, pulled back to the BBC, expecting it to get to the MA1, which it did, and it went through the MA1 up to the zone again, right up above us. All right, and those were the YM trades. Now I'm going to bring the 6E over here and just go over some things on the 6E. I'm sure we're going to cover this in much more detail in the partners meetings tonight. But there were setups on the 6E this morning. Early on I took a couple, and I didn't do very well with the couple that I took early on, at least the ones that I showed everyone. But it did recover, and the 6E did become a pretty good trending market. Let me just scroll back a little bit here, and I'm not going to go over everything I did. I'm just going to go over what is actually there. Okay. Now on the 6E, this is a 4-tick range on the 6E, and you're looking for the divergence. When you get the divergence, you're looking for a close down below the MA1, which happened right here. All right. So this would have been a shorting opportunity right there. All right. Everything gets back up above the elbow here. We didn't get anything on that side. Okay. Right here is where we finally did. It would have been right here, would have been the long opportunity right in there. Okay, another one, though the cycle right here is going right down at you. It wasn't as attractive as this one here where everything was going up. But there was an opportunity right in there to get a little bit of probably 8 ticks or so out of it. Okay, same thing in here. Another probably 6 or 8 ticks right up to the zone. As the thing continued on, right here was a shorting opportunity. Okay, it pulled back down a little bit, chopped around inside the zone, but it did end up going short pretty well. Over here, with the divergence, was a long opportunity. I should put more arrows on there for you. Right in there. Okay, another one right here, though this one wasn't as attractive as the other one because it was right in the zone. So I definitely wouldn't have taken that. Over here, another one. Right in there. Okay, at 10:01. Over here on the short side, you see this line down here, the cycle part of the combo, is oversold. So these faster lines are diverging from the slower line, suggesting that price is going to snap down to the slower line. And it did. Right here. Okay. And over here, well, we have a current long going on right now. Right there. That is the 4-tick range. Now let me scroll back and go over those again for you, because this is being recorded and you guys will probably want to see them again in the recording. All right. You see how far back I'm going here? I'm going into the wee hours of the morning when the euro opens up. Right here, divergence, everything heading up. We have some, apparently I skipped right here. Divergence right here, everything headed down. This was the divergence right here. Okay, there was some in here, but the elbow flipped up. All right, on this one, the elbow flipped up, so there was no trade in there. Right there, you see it? It was again right here, not as attractive as this one, because this cycle was coming right down at you. That was a trade I actually took this morning. I took it on a pullback. It was probably not a wise thing to do. Right here, divergence, and there's the move up. Right here, divergence, and the move down. Over here, divergence, and the move up. Okay, and that one's still going right now. Alright, I want to drag that over and bring a different time frame, same market over here. If it didn't drag, here we go. Different time frame, same market. Okay. More trades that I took this morning. Some that worked, some that didn't work. But I'll show you what I was doing. Okay. Now, one of the things, let me scroll over a little bit more if it'll let me. There we go. One of the things that Jeff G pointed out is when you get a solid green line below the envelope and you pierce the envelope, that price at that point will often just run. Okay, you can just jump right in and get in on the run. That's what he had pointed out. Now, there were other things. Oh, okay, the thing just moved on me. But there were other things that we were pointing out today in the room that we're going to go over in the live trading. I mean, not in the live trading room, but in the workshop tonight. You see right here, it pierced the envelope down here. It wasn't green when it pierced it, but it turned green right after, and it just made a strong move up. Over here, when it was coming out of the bottom right here, all right, it was just moving up strong. It was the beginning of a strong move up. When it came out of the completely overbought area, it was a good move down. When it came out of the completely oversold area, another move up. All right, came out of the completely overbought area, another move down. These are all things that we're going to go over in the workshop tonight. Okay, so I'm going to slide this off of there, get back to just showing the ES and the YM, and that's it. I'm going to wrap it up here. So if anybody has any questions about any of this, I haven't even looked in the question box. If anybody has any questions about any of this, I am happy to answer them. Is there a reason I don't use the chop bands on the 6E4 tick? Yes. I use the chop bands over here because they've been tested with this on the ES. I haven't tested them with the 4-tick 6E. Okay. There's a huge difference in volume between the two. So there's a potential that the chop bands wouldn't have the same effect on the same time frame on the 6E. Okay, if that makes sense to you. Alright. That looks to be the only question for right now, so I'm going to wrap up the recording right here.